Hello. Assalamualaikum warahmatullahi wabarakatuh. Dr. Tain. Now it's my turn to give a lecture. It's module 5. So the title of this lecture is the cost structure and revenue streams. So this is part of the business model canvas. Okay. So I believe that you have learned some of the component of the BMC, the business model canvas. So the first part is the key partners, and then I am sure that you already discussed among your groups who are the key partners that involved in your business, and then you know what are the activities that your company needs. Okay, and then what are the value proposition, what are the key resources, so or how can you market your product, via what channels, and then you know how to segmentize your customer, and then you know how to make a relationship with your customer. And now I would touch on two different things. It's the cost structure, and then another one is revenue stream. So the cost structure is something that you give, okay, something you need to spend on, okay, and the revenue stream is something what you get, okay. Okay, so in this module, the learning objective is at the end of the module, the student should understand on about the concept of operational management. Okay, the first part is I will touch on the operation management overall, and then you should know the operation plan and the process workflow, and meaning that how your product is being produced, and then you should know what the cost structure is, and then I will show you how to estimate, to count the costs, okay. And the last part is you should know, you need to able to understand the revenue, what is revenue stream. So, we will start with the concept of operation management. Okay, when we talk about the operational management, so we should focus on what are the issues actually. So I'm sure that all the company, all your group members, or your company members or business already discussed what products and what are services that you plan to do. Okay, so in this operation management, we would focus on the operational issues. Okay, so if operational issues will focus on producing the products or services according to the customer's need at minimum cost. So in this part, the producing of product and services would focus on the customer's need, which is and at a minimal cost. So, what are the concept of the operational management? Okay, so in operation management, so it deals with two different things. The first one is design, and second one is management of what, of products. The first one is products. The processes is either products or processes or services, and supply chains. Okay, and these are according to the quality. The first one is quality of product, of course, the quality of the process or the quality of the services, and also according to the cost, according to the quantity, according to delivery time, and last but not least is the safety standard. Okay, so all these product, processes, services that you are plan to produce uh, must be according to these things. So first thing that you need to think to discuss among your members is what are the customer needs. Okay, because you are producing a product which needs something like how to say, what are the customer required. I mean, what they want to know, what they want to have in their on daily life, or something, what kind of services that they would like to have. Okay, so as a provider, as a business partner, I mean a businessman, you should think about the quality, about the price, about the services, about the customization. Is it okay, I mean, is it possible to customize any product that you produce? Okay, and is it convenient, is it easy to get the products in the market? Okay, in order for you to produce your product, you need to have this kind of process, or we call it a business value chain. Okay, so in order for you to produce the specific product or specific what we call it services, you need to start with the marketing and sales. Okay, and then after you know how to market the product, you need to do some research. Okay, you need to do some development. You need to know what are the product. Is there any the same product in our market right now? Okay, current market. And then is it possible, I mean, is it relevant to have this kind of product right now, I mean this era? Okay, and then and then we go to the procurement, whereby you take into account about the inbound logistic. Okay, and then after that you need to think how to manufacture and how to package your product. Okay, and then next is you also need the inventory management, and also the warehousing, where is the product will be produced, what kind of premises do you need in order for you to give a good product, a good quality of product. And then next is you need to think how to distribute the product. So you already have the product in your premises, in your warehouse, in your factory. Then you need to think how to distribute, how to put into the market or supermarket, or into a mini market, and so on and so forth. Okay, and then in order for you to distribute the product, so you need to think about the outbound logistic as well. Okay, and the last part is when the customer already bought your product or already have your services, you need to have their support, I mean you need to have their feedback, and as well as their you need to give them a support if there is any problem with the product that and service that you provide. There are three basic steps in operation management. It start with the inputs, and second the processes, and the last part is outputs. So the inputs will include the raw materials required, and the raw materials that you need to produce a product, and then you need to process all the raw materials. Okay, and after that you will have the goods, or you will have your product very well, I mean the product looks interesting. You will have the services that you plan to give to the customers, so it's considered as an output. So we go for operational plan and process workflow. So this is part of the processes, the process of the product. I put an example, the processes of to have to produce a product. So this is the bread. Okay, in order for you to have a bread, you need to have your raw materials. So for this kind of examples, you need a flour, and then from the flour you need also the sugars, and you need to add everything, assemble the materials. Okay, and then mixing it, and then baking it in oven, and then you might want to slice it, and then you might want to package it. Okay, and then you will have at the end of the process, you will have the finished product. So this is all the process that you need to think to have your own product. Okay, this is a product, okay, not a service. So we will see another one for services, another example for services. Okay, this is the example for the processes. I mean, the services process. Okay, this is a laundry service. Okay, so you as a company that provide this service, the customer will send the clothes for you to be clean. Okay, and then you start the cleaning process, and then you dry the clothes, and then you iron the clothes, and then you do the packaging, and also have the quality control check. Okay, you need to look at one by one. It's either is the clothes clean or need another cleaning. Okay, and then you also can add some another part of services. Maybe you can deliver the clothes to the customers, and this process is it's like a circle process. Okay, a cycle. Okay, from cleaning, and then cleaning and ironing, packaging, and so on and so forth, and then it start again. So these are the things that you need to think if you are providing services. Okay, this is the list of the things that you need to consider when you do an operational process. Okay, the first one is premises. So where does the premises where you would like to have your factory? Okay, is it outskirts of the town, and maybe out of town, or maybe in the town? Okay, you may think that thing. You may think how it should be. Okay, and then you need to do a design, like for example design the product, okay, to make it more interesting and to make it convenient for the customer to have it. Okay, and then you need to think also the raw materials. Is it a quality one, or maybe something that is edible for all the vegetarians? Okay, and maybe you need just a small thing but you in high quality. Okay, and also you need to think the instrumentation. I mean the machine that you need to have. You need to process all the raw materials. Okay, and then you have the process line one by one, start from here, and then second transfer from one segment to another segment, and then the last part is packaging. Okay, and also you need to think the workforce, the budget, the maintenance, all the things you have to maintain, especially the instruments. Okay, and lastly you need to have the quality control. So this is the thing. This is quite important because the customer will base on this. Okay, if you are producing low quality, so the customer won't buy again. Okay, now so I would tell you what are the cost structure and what are the revenue stream in a glance. Okay, so basically in the cost structure, you will have the cost of goods sold, the COGS. Okay, you will have a launching event, a sponsoring events. Okay, and then what are the expenses, anything that has something to do with salary, for the wages, the allowances, the payment of delivery man, so on and so forth. That are the cost structure. So what you have in revenue stream is a sales, okay, sales that you have made, okay, and then fees, the royalties that you get, okay, and also the commission, okay, and then you will also go to the break even. I will let you know. I mean, I will tell you. I will explain what the break even is, and then what are analysis involved in this process. So we start with the cost structure. So the cost structure also we also known as money out. Okay, so money out means that you spend the money on something. Okay, when we talk about the cost structure, there's a few questions that you need to ask yourself. Okay, so you need to know what are the most important costs associated with your product or services. So important costs. So you bear in mind what is the main thing that you need to buy, you need to have to in order for you to produce your product. Okay, okay. For example, your raw materials. So it's something the quality of raw materials. Though, so this is an important cost that you need to know. And secondly, you need to ask yourself what are the most costly in your business. Which part is most cost. Will need higher cost. For example, some product or services just need a few ringgit. It's just a few dollar. But the process of the marketing, the process of the advertising is much higher than the product itself. Okay, and the third one is which key resources or key activities are the most expensive. I believe that all of you have discussed about this in your BMC previously. Okay, you might refer back to the key resources and the key activity section of the canvas. Okay, and then from there you know what are the most expensive. Okay, and then you could understand the most important and expensive elements of each, so that you can quickly identify the most crucial cost in your business model. So from through this process you will be able to define whether your business is more cost driven or value driven. So in cost driven, it means that you take into account, you put the cost is the first thing that you consider. So you take this cost as important thing. Make sure the cost is at minimum to have the product, to have the service. Okay, but if your business is more on value driven, you never think about the cost. Okay, so you just put all the value at you just put all the value thing You just make to sure that all the services and product is in high value, yeah, regardless of the cost. Okay, so this is the bill of materials, the materials that you need to have your product, okay? And we call it BOM, okay? Bill of materials is a product structure. So it's a product structure, what you need, what materials you need in order for you to have your own product, okay? So it depicts the list of all components, ingredients, materials, or items required to make a product. So in these examples, you will need a t-shirt, you will need ink, packaging, and design. So all of these have their own price. So you need to put a price in one unit. For example, for this t-shirt, when you add up all the item needed to produce this, the total will be 5 ringgit. Okay. So now it's a second example. This is about the BOM for donuts. Okay. So you need an item like white flour, caster sugar, salt, dried yeast, egg, milk, and vegetable oil. Okay. So the white flour is you will need 2 kilos. So I believe in 2 kilos you will get maybe 100 donuts. Okay. So the cost will be 6 ringgit. Okay. And the caster sugar, the cost 5 ringgit, so on and so forth, and the total is 38 ringgit and 50 cent. So this is maybe the 30 ringgit or 50 cent for hundreds of donuts that you will produce. So this is a bill of materials. So these things you need to think, you need to have in mind. You need to itemize each of raw materials you need to produce. Okay. I believe that I just prepare in case you need this thing. Okay, group, it's a group activities actually, so it can be done in 10 minutes. Okay, you need to prepare your own BOM of your product. Is a product inside product or your services. Okay, so just list out the materials you need and and the quantity and cost, and then you will know what are the what are the price of your product. So now we go for the cost of goods sold. So before we go further, we go further for the cost. So we need to know what is cost. So the cost is the estimation of required business investment. Okay, this is something you need, the money you need to produce to produce a product, to do the production activity, or to provide the service to the customers. Okay, so the money out. Okay, so what is cost then? So the cost is referred to the calculation which is done usually at the end of the accounting period, okay, for businesses that all sell product. Okay, these include several different types of costs. Okay, costs will include different types of costs, which are direct costs, indirect costs, fixed costs, and variable costs. So you need to bear in mind each of different types of costs. Okay, the first direct cost is something that you need for shipment, or you need to transfer the product. So that one is a direct cost. Okay, anything that has something to do with the product or services, it's called a direct cost. Okay, just previously, like you need a white flour, caster sugar to make a donut, so it's a direct cost. Okay, now, what indirect cost is something that you can't see. It's maybe something it's intangible. Okay, for this one, the indirect cost example is labor, storage, and then the uses of the electricity and so on and so forth. Okay, and then the fixed cost is something like the office rental. Okay, meaning that if there is no operational, you still need to pay for it. Okay, like the office rental, and the van and something like that. Okay, and then another one is a variable cost. So these variable costs include both direct and indirect costs. As I mentioned before, COGS is direct and indirect cost, which is attributable to the production. Belongs to the production of the goods or product or services that you provide, sold by a company. So that is a COGS, and another one is gross margin. So this gross margin, or we call it gross profit. Okay, is a sale revenue, normally in percentage. Okay, remaining after paying for the costs. Okay, so gross margin. So how this is how we calculate the percentage of the gross margin. Okay, and so you should know the revenue, and then you need to subtract with the costs, and then per revenue, and multiply it by 100. Okay, this is the example of the cost. So how you estimate the cost? Okay, so it's include direct costs and indirect costs, and then you can get costs. Okay, so direct cost here is a material that you use to provide, to produce a product. Okay, like for example here, the t-shirt, the price for the t-shirt is 2 ringgit and 50 cent, and then the ink is one ringgit and 50 cent, the packaging and design, and then you need to also add the indirect cost. So indirect cost is for here is advertising cost. Okay, so normally it will calculate as a per unit, and manufacturing. So both are 3 ringgit. So total up, the cost would be 8 ringgit. So this is a cost. Now is example for the gross margin. How to calculate the gross margin? Okay, so just now you just calculated the cost. Okay, so the cost is 8 ringgit. The cost is the product price. Okay, so the company sells the t-shirt at 28 ringgit. So this is 28 ringgit, and then so how to calculate it? Then you need to start with the revenue. The revenue is the price that the company sold the product is 28 ringgit, and then subtract 8 ringgit. 8 ringgit is the cost, and then so it become 20 ringgit. So 20 ringgit per 28 ringgit times 200. So the percentage of the gross margin is 71%. So that is how you calculate the gross margin. Okay, as previously mentioned, so I just prepared this slide in case you need these activities. So normally this can be done by 15 minutes. Okay, so from this is how you prepare the costs, and then how you estimate the gross margin percentage. So you should know the BOM, the indirect cost, the manufacturing cost, so on and so forth. Okay, and then from there you need to calculate your own gross margin. It depends on your own company. Okay, that's another thing that you should know of what are the sales, and then you should know what is the break even meaning. Okay, and then what is the gross profit margin. So what are the sales? So sales is equivalent to the price of your product, and how many product, and what is the quantity that you sold, and then you times with price, and then you call it as a revenue. Okay, so how much you get. How much money do you get from your business? When you sell your product to the customer. Okay, now is what is break even? Okay, so this graph will show you what is the meaning of the break even. Okay, and from here you could see that the break even point is where the total cost equals to the sales. Okay, meaning that this is what you how much the money out, and you will get the same how much the money in. So it call it a break even. Okay, and then from this graph also you can see that where how do you know your business is has facing a loss, or you also know how um, is your business make a profit, enough profit from here. Okay, so when you see the green line is the total cost. So the total cost include the fixed cost and the variable cost. Okay, so the fixed cost, like I mentioned before, this is the cost where you pay the storage, your premises. Okay, whether or not there is no there is an operation or not. Okay, so you must pay for this. And then the variable cost is a cost, like I mentioned, is indirect and direct cost. Okay, and then if your the point of the your output and the cost and revenue is at this part, in the loss part, meaning that you get less than the fixed cost that you spent. So facing the loss. Okay, and if you make if the money that you get when you sell your business, I mean sell your product, is more than the total cost, then you get a profit, you make a profit. Okay, this is quite tricky, but if you look at this graph more in detail, I think you should understand that. Okay, there's the three types of break-even point that you need to know. So the break-even thing, okay, the first one is break-even point, the second one is the break-even price, and the third one is break-even quantity. So the break-even point is where the fixed cost per with the selling price when you subtract the selling price with the variable cost, okay, and that you can find, you know the break, what is your break even point. Okay, so the break even point is equals to the total cost and equal to total revenue. So you didn't get anything, you did not loss, and you did not make any profit. Okay, that is the break even point. Okay, next is break even price. So break even price is something that you fix the fixed cost plus the variable cost, and then you divide with the quantity. Okay, how many thing you how many product you produce. Okay, so that make the price, that make the price that you need to sell your product, where there is no profit and there is no loss. Okay, that's what we call a break even price. And the break even quantity is something like you need to sell it at least how many. Okay, let's say you produce 100, and then to make sure that you are not lost and you are not make a profit, and you should like sell it 50 in quantity. So you produce about 100, and then at least you need to sell it about 50. So that is the break even quantity. Okay, what are expenses? So the expenses is, like I said, it money out and that you want to pay all the business transactions and administration. So normally it's related to the balance sheet, okay, and taxes, and then it is reported in profit and loss statement. And this is an ongoing payment like utilities, rent, and then payroll, marketing, storage, or something like that, anything like something like that. Okay, and then you spend your money on salary, the KWSP, and so for your workers. Okay, and then you also expand. You may need this money to spend on the business registration, and then you need to renew the license, and then you have to pay for the professional fees. You need to send your workers for training, and then you need to renovate your premises, and then you need to change your furniture to make it more attractive, more interesting, and then and it also involve the drinks. I mean, you need to treat your customers, and then and including the unexpected expenditure. Okay, now we go to the revenue stream, or we call it a money in. Okay, the revenue stream is a building block representing the cash. Okay, so normally it's not a profit. Okay, and whereby a company generates from each customer segment. Okay, so generally it's made up of either recurring revenue or transaction based revenue, project revenue, so on and so forth. Okay, so revenue stream is a lifeblood of the company, meaning that it is very important. And then if there is no if it's not if it's in if not in the good hands, then it might give a disaster for the business. Okay, and how much and through which methods are people willing to pay for your product or services? Or in other words, the examples for this revenue stream is such as the renting, leasing, lending assets, and like subscription fees, and so on and so forth. So it's either monthly or weekly, so on and so forth. So this question is the thing is how you understand the revenue streams. Okay, so when thinking about the revenue streams, it is important to ask yourself a number of questions. So these are the questions. So how much will customers be willing to pay for the value your product provides? Okay, that's one. And the other one is, what are competitors rates for which customers currently pay? Okay, so you need to think all of this. Okay, and how do they currently pay, and how would they prefer to pay? Meaning that how to make the people, how to make the customer easy to pay for your product or services. Okay, and the last one is, how much will each revenue stream contribute to overall income? Okay. Okay, this is the list of the types of revenue. So it's either asset sale. So asset sale is an ownership rights of physical products. For example, Ford sells automobiles, or BMW sells the cars. Okay, whereby the buyers are free to drive or resell or dispose of their products. Okay, and the other type is sale of products, such as like beef, like I mentioned before, the donut, the T-shirt, and so on and so forth. Okay, the DVD. And then another type is a usage fee, services like DHL, or services like Maxis, or so on and so forth. Okay, and then there's also the subscription fees like Astro, the Netflix, so on and so forth. Okay, and then it's also include lending, leasing, renting. This is for example, the renting a car. And then the other types is licensing. Okay, charging for use of protected intellectual properties, for example, the Microsoft Office, so on and so forth. Okay, and then it's also include the brokerage. So the brokerage is an intermediary services between two parties. For example, the estate agent selling a house on commission. So this is a brokerage. And the other one is advertising, like website advertising, or anything, or what you call it, advertisement board. Okay, when you go to the motorway, highway, and then you can see the advertising board. Okay, so that kind of types of revenue that we currently have. Okay, now I also include the BMC, the business model canvas here. This is the link. Okay, so you could see that this is I believe this is the same canvas that you made for your own business. Okay, so I just want to highlight the part of the cost structure and the revenue stream. So for linking, the cost structure, they have a web hosting cost, the marketing and sales, the product development, and general administrative. So that one is a cost structure. And for the revenue streams, they have hiring solutions, marketing solution, the free offerings, and premium subscription. So this is the thing that they have for this company, the Linklink. Okay, and also you could see how how what are their key partners, key activities, and the customer segments and channels, and so on and so forth, for your reference. Okay, I also have this BMC for the trip advisor. So as I said, you just want to highlight the cost structure here. So they divide the cost structure into two. Is either operational or non-operational. Okay, for the operational, they put sales and marketing, and then technology and content, and then capitalized costs. Okay, and then the balance sheet, they put the property and equipment and intangible assets and goodwill. Okay, that's a cost structure. And for the revenue, they put for this trip advisor business, the revenue are click based advertising, meaning that when people are browsing the website, once they click, and then they get paid. Okay, and then the display based advertising, that one, the previous one is click, and this one is this display based, and the other one is hotel revenues. They also have a hotels. Okay, so as a conclusion, this is the real aim of BMC, or business model canvas. So in the right box is a cost structure, the cost, operating expenses, and taxes. So this is the cost structure. Okay, and the other part is revenue structure. Okay, whereby that they might be you might have the largest possible profit margin from these sections, and then you have a percentage of the gross profit margin, and then there's a net profit per month and per year, and then there's also the sedekah, derma, zakat, and so on and so forth. Okay, that's for revenue structures. So this is the real aim for the BMC, or business model canvas. Okay. Okay. With that, I thank you. So, thanks for your attention. Bye.